Data published on Tuesday showed the French trade deficit widened to €6 billion in February, the widest gap between exports and imports since June 2012. But has the country done enough to avoid recession? Philippe Waechter of Natixis Asset Management is on the phone with me now. Philippe, today's data will only add to what has been described as anaemic growth. Can you expand on France's current economic outlook?
Well, when you look at the French economy and the trade deficit, say that, there's probably a lack of competitiveness. And because, in fact, at the end, the target for exports is just to buy what you cannot produce. And clearly, we don't export enough in France to do that. So there is a clear problem of competitiveness. At the same time, when you look at French economy, you see that since spring 2011, GDP level has not changed almost. This means that there is no momentum in French economy, and that's what is problematic, because consumers do not spend a lot, companies do not invest a lot, and so the question we have is how to go out of this almost 0% growth we have since spring 2011. And because with that you have lower employment, and the question we will have in 2013 in France is, with this environment, how will we be able to finance the social safety net?
The Bank of France remains hopeful of first quarter GDP growth of 0.1%, narrowly averting recession. But even this figure brings France dangerously close to missing its budget deficit targets, based on growth of 0.8% this year. Do you share the central bank's optimism for these figures?
Not yet, I would say. In fact, INSEE, the French Statistical Institute, said expect 0% for the first quarter. Banque de France is at 0.1, and Pierre Moscovici last weekend said that the French economic minister of the economy said that probably growth will be close to 0.1 for the whole year. In fact, he's very close now to the European Commission forecast for France, and at the same time we have to wish he combines this low growth forecast with 3.7 public deficit that is expected by the European Commission. So we are still in a very tough situation, very weak growth situation, and the question will be, how will we be able to converge to this public deficit target?
Are the OECD's comments that France must implement structural reforms in order to restore public finances, create jobs and boost competitiveness starting to ring true?
Well, I would say that on OECD, last year they said that France has to adopt austerity policy, and this year they said, well, you have to make structural reforms. Which one is a true one? But in fact, the point is probably we have to change our way of doing growth in France. We have to change a lot of institutions, and it has started with the law that is at the Parliament currently on the labor market. And things are changing. We will have a negotiation on retirement in the next coming months, and so things are changing. But you know, the problem in Europe is that you don't know exactly how to make a hierarchy between structural reforms, how to improve the efficiency of your growth process, and the unbalanced public finance, how to make things compatible between the two. That's what is very tough in France, in Spain, in Italy, in Portugal, and even in England. Probably we will have stronger imbalance on public finance, and what will be financial market reaction. You know, it's a very complex situation, and probably we have to make first structural reform in Europe, in France, Portugal, Italy, and Spain, and different countries, just because at the end, public finance will improve only because we have growth. And that's the reason and the target for structural reforms.
President Hollande's popularity is currently tumbling. Is the president, who claims his enemy is the world of finance, position as salvageable? Is it simply a case of transparency and being honest with the French public about the current economic scenario, particularly as scandal over France's former budget minister's secret Swiss bank account grows?
Well, in fact, President Hollande said that in Le Bourget before, in the run-up of his election last year, and in fact, he wanted to say we need to have our own strategy, and our economic strategy has not to be directed by financial markets. That's why he said that finance was his enemy. Since then, things have changed because it's complicated when you are in power, and they have to manage with finance. That's what they did. And the question now is effectively how to maintain government credibility after what has happened with budget minister. And the answer is not economic, is not financial. It's political, and that's what we are waiting for from François Hollande now, is a political answer to all this issue, to maintain consistency inside French society. It's very complicated at this moment in France, because we have a part of our residents in France who are against finance, and François Hollande, as president, has to make all this behavior consistent, and he has to give a political answer to this issue, and that's what we are all expected for.
Philippe, many thanks for your comments. I'll be back tomorrow with another Targets in Focus interview. Until then, goodbye.